On today's show, we are talking tension at sea, but confidence on Wall Street. A record rally meets a reality check. And today we'll wrap up our gender wealth gap series talking about retirement planning for single women. All right, so let's get started with markets in motion. Let's jump right in because the Middle East gave us another wild week. Jeff, the big headline was the U.S. Navy actually seizing an Iranian ship after Iran tried to push through the blockade. That's not a rumor, not a threat. That was a real physical confrontation on the water.
Yeah, and that definitely rattled some things up. Iran immediately said, "We're not coming to the talks in Pakistan." They basically slammed the door shut. But then, in classic geopolitical fashion, a few hours later, actually, we'll come to the second round of talks. So Marcus, it's like watching someone storm out of the room and then peek back and say, "Okay, but I'm still listening."
Exactly. And while all that back and forth was happening, the Strait of Hormuz turned into chaos. We're talking gunfire, ships being stopped, captains not knowing whether to move or to stay put. It was just messy. And when the world's most important oil choke point gets messy, markets pay attention.
And it's not just the U.S. and Iran reacting. It's the UAE is talking with the U.S. Treasury about wartime financial support, which tells you Gulf countries are feeling the pressure. And then big oil, the Exxon, Chevrons, BPs of the world, they're already shifting billions of dollars into Africa and South America. And they're basically saying we need backup plans.
Yep. Now here's the twist though. While all this drama was unfolding, the stock market said, cool story, but we're going to go up. And up it went. Record highs across the board. The S&P crossed 7,000, then 7,100. The Nasdaq hit 24,000 and the Dow is right under its all-time high.
Yeah, but the bond market, totally different vibe. Bond investors like the cautious friend at the party who's sipping water and then watching the exits. Yields stay high, which tells us they're not convinced the danger is past. So,
And underneath all that, the global deal making is waking back up. Big mergers and big acquisitions. Companies are making moves again. That usually means CEOs are feeling confident enough to take the risk.
but economists are warning, even if the war winds down, inflation might stay sticky because fuel prices have been elevated for so long now. And then Japan threw in a curveball tsunami warning after a major earthquake. And thankfully, markets didn't panic, but they added another layer of uncertainty.
Yeah, so let's talk central banks for a second. So inside the Fed, there's this debate brewing. Some folks are saying that AI is boosting productivity enough that the Fed could cut rates sooner, but a lot of Fed officials aren't buying it.
And Kevin Warsh, who's pushing for big changes at the Fed, may end up clashing with the president over interest rates. Meanwhile, China is kind of keeping its lending rate steady for the 11th straight month, signaling we're good for now. So globally, everybody's reading the same book, but we're on different chapters. So,
Yep, and as we said, corporate America stayed busy. QXO is buying Top Bill for $17 billion. That's a huge move in the building product space.
and then we got Eli Lilly, who's close to buying Colonia Therapeutics for over $2 billion. I'm expanding their biotech reach. Walmart is turning its stores into mini warehouses to speed up same-day delivery, taking a direct swing at Amazon. And then
hmm
luxury brands like Louis Vuitton and Hermes are shifting focus away from the Gulf because sales there have cooled off. So,
Yeah, and here's a big one. The administration plans to refund $166 billion in tariffs after that Supreme Court ruling. So that's going to shake up trade planning for a lot of companies. All right, so that wraps up Markets in Motion, and we'll return after the break with Finance in Focus.
Retirement doesn't mean lower taxes. In fact, for many retirees, tax pressure increases. Required minimum distributions, taxable Social Security benefits, Medicare surcharges, and rising healthcare costs all combine to create a growing tax burden over time. Longer lifespans mean more years exposed to that pressure. That's why Friar Financial builds dynamic retirement income strategies designed to manage taxes proactively so more of your money stays yours throughout retirement.
All right, so we're back with finance in focus. So let's talk about the rally. Stocks took off last week as investors started believing the war might be winding down. Again, the S&P jumped 4.54%, the Nasdaq soared 6.84%, and the Dow climbed 3.19%.
And the momentum was real. So by Wednesday, the S&P had risen in 10 of the last 11 seasons. The Nasdaq logged its 11th straight green day. Thursday pushed the streak the longest since 2009. And Friday, oil prices dropped 10% after Iran said the Strait of Hormuz was completely open. And markets loved that.
Yeah, and then earnings season kicked off really strong as well. Bank of America says that 76% of companies beat earnings in week one. That's well above average.
But then here's the funny part. Even with those wins, stocks didn't pop. So they traded right in line with the market. That tells investors, tells us investors are saying, nice job. But what's your guidance? Geopolitics is overshadowing fundamentals right now.
Yep, and with 90 companies reporting this week, we're about to get a much clearer picture. So here's the economic data on deck this week. We got retail sales, business inventories, pending home sales, the petroleum report, jobless claims, and consumer sentiment.
And then earnings are stacked as well. We got GE Aerospace, United Health, Intuitive Surgical, Tesla, IBM, Texas Instruments, Intel, American Express, Lockheed Martin, Procter and Gamble. So some of the big names and a little bit of everything from tech to healthcare, defense, consumer goods, a lot, a lot. And that kind of wraps up Finance and Focus. And we'll be back with our Wealth Wisdom workshop as we kind of get into retirement planning for single. Mhm.
Welcome back to the Wealth Wisdom Workshop. Today, we're focusing on a group whose financial journey is often overlooked: single women planning for retirement. A new client recently told me something that stuck with me. She said, Marcus, it feels like getting on track for retirement is harder for me than for my friends who have partners. She wasn't complaining, she was being honest. And her honesty reflects the reality that many single women face. Because the truth is, single women often carry the full weight of their financial lives alone. And when you combine that with the unique financial challenges women already face, the wage gap, time out of the workforce for caregiving, and the tendency to put others first, it's understandable why retirement planning can feel overwhelming. But here's the good news: with clarity, strategy, and support, single women can build strong, confident plans that protect their lifestyle and their future. So, Jeffrey, walk us into what makes this such an important conversation.
Absolutely, Marcus. So let's start with the landscape. Statistically, women earn about 84 cents for every dollar earned by men. That means less money available to save, invest, and grow over time. And when women step out of the workforce to take care of for children or aging parents, which they do at much higher rates than men, that gap widens even further. And those breaks in employment don't just reduce savings, they reduce lifetime earnings, retirement contributions, and Social Security benefits. And then there's their emotional side. Women often put themselves last. They'll help a parent, a sibling, a child, even if it means dipping into savings or delaying goals of their own. And here's another important reality: more women are single than ever before. According to the U.S. Census Bureau, 2% of women over 18 are single and 30% have never been married. That means more women are entering retirement without a partner's income, benefits, or shared expenses. So the question becomes, what can single women do right now to build a retirement plan that supports the life they want? And let's break that down, Marcus.
Yeah, so the first step is maximizing income. Advocating for yourself is not optional, it's essential. Know what others in your field earn, use pay transparency laws to your advantage, and negotiate. Every additional dollar earned is a dollar that can be saved, invested, and compounded. So, next, pay yourself first. Consistent saving is the foundation of retirement readiness. Contribute as much as you can to your employer plan, ideally the maximum. Automate those contributions so the money moves before you ever see it. That's how habits become wealth. And then there's cash flow. You need to know what's coming in, what's going out, track your spending, understand your monthly lifestyle cost. Financial professional can help you build a budget that reflects your real life, not a hypothetical one, so you can calculate what it will take to maintain that lifestyle in retirement. I'm going to let Jeffrey kind of jump in and talk about this next part.
So debt is another major factor. Student loans, mortgages, credit cards, these can stand between you and the retirement you want. You need a plan to pay them down strategically, whether before retirement or as a part of your retirement income plan. Then on top of that, we have longevity. One of the most important considerations for single women. Women live longer than men, and single women need to plan for the possibility of living 20, 30, even 40 years in retirement. And that means planning for your healthcare costs, your long-term care needs, your housing decisions, your social support networks, and your community and connection. Because living a long life isn't just about the money, it's about the quality of the life too. Studies show that social connectivity is one of the strongest predictors of longevity. So where you live, who you're connected to, and how you build community matter just as much as your investment strategy. And then finally, estate planning. Single women need clear, updated documents, wills, power of attorneys, healthcare directives, beneficiary designations. Someone needs to be empowered to speak for you if you can't speak for yourself. And that's just not planning, that's protection at the end of the day.
Yep. So to wrap it up, single professional women absolutely face unique challenges when it comes to retirement planning. But those challenges are not barriers, they're simply factors to plan around. So, with a clear strategy, consistent habits, and the guidance of a financial professional, single women can build a personalized retirement plan that supports their lifestyle, protects their independence, and gives them confidence about the future. So, you don't have to navigate these decisions alone. You deserve a plan that reflects your goals, your values, and your vision for your retirement now and for the rest of your life. So, this concludes our three-part Wealth Wisdom Workshop series on women and finances. And I hope each part has given you clarity, some encouragement, and the confidence to take the next step in your financial journey. If you're ready to build a plan that supports the life you want, it would be our honor to walk that journey with you. So, until next time, we'll see you on the for our financial forum. Take care, everyone. Thank you.